The stock market is more than a place where numbers move on a screen. It is a living system that reflects the hopes, fears, and decisions of millions of investors every single day. When you hear about Wall Street, the Dow Jones, the Nasdaq, or the S&P 500, what you are really hearing about is a measurement of collective confidence in the future of businesses and the economy. People buy and sell shares of companies because they believe in growth, because they want to protect their savings, or because they see opportunities to profit from short-term moves. To understand the stock market, you have to look at both the human side of decision-making and the economic forces that drive those choices. The United States has the largest and most influential stock market in the world. Companies like Apple, Microsoft, Amazon, Tesla, and Google are not just businesses, they are global icons whose performance affects everything from jobs to retirement funds. When these companies rise, investors around the globe pay attention. When they stumble, headlines spread within minutes and billions of dollars in value can shift overnight. That is why following the market is not just about curiosity. For many people, it directly impacts their wealth, their retirement savings, and even the broader economy they live in. One of the first things to know about the stock market is that it is driven by supply and demand. If more people want to buy a stock than sell it, the price goes up. If more people want to sell than buy, the price goes down. But behind that simple rule is an ocean of reasons why someone might buy or sell. Sometimes it's based on company earnings. Sometimes it's based on a rumor or a news headline. Other times it's about the Federal Reserve making decisions on interest rates, or about inflation, or even about global events far outside the United States. Every investor, whether professional or individual, is looking at the same headlines and making different decisions, which is what keeps the market in constant motion. The stock market is often described as being in one of two moods, bullish or bearish. A bull market means optimism, rising prices, and confidence that the future is bright. A bear market means fear, falling prices, and uncertainty about what's ahead. These terms come from the way the animals attack. A bull thrusts its horns upward, just as prices rise, while a bear swipes its paws downward, like prices falling. The mood of the market can last months or even years, shaping how people invest and how they feel about the economy overall. If you have ever wondered why the market matters so much to everyday people, think about retirement accounts like 401(k)s, pensions, and IRAs. Millions of Americans have their savings invested in the stock market through these accounts. When the market does well, those retirement balances grow. When it struggles, people worry about their future security. That connection between Wall Street and Main Street is what makes market news so powerful. A decision made in a boardroom in New York or a policy shift in Washington can ripple through to someone planning for college tuition in California or a family saving for a home in Texas. Another layer of the market is corporate earnings season. 4 times a year, major companies release their financial results, showing how much money they earned, how many products they sold, and what they expect for the future. For investors, these reports are like report cards. If Apple sells more iPhones than expected, the stock may jump. If Tesla misses its delivery goals, the stock may fall. The anticipation around earnings keeps analysts, traders, and everyday investors glued to financial news. And because these companies are so large, their results often affect the entire market. But it is not only about big names. Small and mid-sized companies also play a huge role. They may not make global headlines, but they can deliver big opportunities for growth. Investors often look for the next big company before it becomes a household name. This search for potential is what keeps venture capital alive and what makes the stock market exciting. For every giant corporation today, there was once a time when it was a small company trying to prove itself. Market Horizons exists to bring those stories to light, to connect the dots between small moves and big shifts. The Federal Reserve is another powerful force in the market. When the Fed raises or lowers interest rates, it changes the cost of borrowing money. Higher rates make loans more expensive, which can slow down spending and investing, but they also fight inflation. Lower rates make borrowing cheaper, which can fuel growth, but they can also risk higher inflation. Investors watch every Fed announcement carefully, sometimes down to the exact words of the Fed chair, because those decisions shape the path of the market. A single press conference can move trillions of dollars. Global events are also tied to market moves. Wars, trade disputes, pandemics, and natural disasters can send shockwaves across the financial system. For example, supply chain disruptions can affect company profits, and political instability can make investors cautious. The US market does not exist in isolation. In a connected world, what happens in Europe, Asia, or the Middle East can impact American stocks. That global link is why the US market opens every morning already influenced by what happened overnight in foreign markets. The psychology of investors is another fascinating part of the stock market. Fear and greed are often said to be the two strongest emotions on Wall Street. Fear makes people sell when they worry about losing money. Greed makes them buy when they hope to gain more. Professional traders sometimes say the market is not just about numbers, it is about behavior. That is why sentiment indicators, surveys, and even social media buzz can have real effects on stock prices. In modern times, platforms like Twitter and Reddit have shown just how powerful collective sentiment can be, as seen in the rise of meme stocks like GameStop and AMC. For beginners, the stock market may seem overwhelming, but at its core, it is about ownership. When you buy a share of stock, you own a piece of that company. If the company grows and becomes more valuable, your share becomes more valuable. If the company struggles, your share value goes down. That simple idea has created wealth for millions over the years, but it has also carried risks. The challenge is always in making informed decisions rather than chasing trends blindly. Market Horizons aims to simplify this complex world. By breaking down the news, explaining what it means, and connecting the dots between numbers and real life, the goal is to make the market understandable for everyone. Whether you are a new investor trying to learn the basics or an experienced trader looking for daily updates, having clear and reliable information is essential. The market does not wait for anyone, but with the right knowledge, you can stay ahead.